Welcome to TradeTheNBI.com. This is John. This report is for the 27th of May, and look at this. We continue to push back up towards the highs here. We're moving further and further towards matching the previous high for the S&P. The NASDAQ had already done it, much more powerful. Every time we reached key algo levels, and once the Fed announced that it was going to start buying everything, boom, every time we reach one, all it provides you is the opportunity to bid higher from it. Comes back to it, and again, they're there to support it, which means that's the new floor, and then we've developed each one of these as we've gone along. And now you have actual opening of economies and movement, so a little bit more exuberance, which has pushed us well back over that 3,000 as expected. But not to mention, don't forget the market players are also recognizing that there's a devaluation that will take place because of the massive liquidity influx. And the market will need to go higher. Will it need to go to 4 to 5? This depends on whether or not there's another stimulus bill. And that would sound shocking to a lot of people, but it's really not that unusual and kind of straightforward math. But a lot of people just don't employ that because all they look at is just straight earnings and standardized valuation. But if you don't take into the fact of inflation, you miss how it really works. NQ, see, that has already virtually reached those highs. Pretty close. Almost there. We're going to see some back and forth probably along these areas, but with the continued excitement and the buildup, you've got some economists referring to the best potential quarters ever coming forward. Remains to be seen. They're certainly going to throw everything they go. At least Trump is going to throw everything he can for the re-election, and I think you'll probably see some foot dragging from a lot of other people on the opposite side to prevent him from having those successes. Either way, you're still going to have record unemployment after having record low unemployment. The euro taking a bounce off that because, we need to float the euro higher to help for international trade, which is obviously the next target on the list of potential reopenings. And of course, travel is going to be amongst that. And until that becomes normalized, I'm afraid there's always going to be a limited amount of growth. And this is going to be the question about which economies are rather self-sufficient in that they can merely trade amongst themselves. And that's really an interesting one within the U.S., whether or not that will be the case. It's certainly something that worries China quite a bit. And probably within that kind of construct, it's usually when you start to look for provocations. I think we're already seeing that in India, with India and China on the border. Some of these things can escalate quite quickly, so that's going to be where the market will be looking next to make sure that what's been relatively quiet and prosperous several years of no major international dust-ups, that hasn't really had too much of an impact. From oil standpoint, holding right here, and I think that they're going to be looking the first signs of significant growth usage or drawdowns. You're going to see a spike even before it's reported. That's the beauty of it. Those guys can read the numbers. Love these little fat tail developments here that take place. Gold's going to continue to press to the upside. Of course, when people are moving into equities, they're not going to be bunching into gold. It's still going to relatively keep holding on to its general support levels. I mean, we had a DOC spread fine, traded off a little bit with the green ABM there. I love when they do little fake stock clearings. If we were in the futures market, you'd be able to look at it. This was an interesting one. I'd show you this. So this is a Zero Hedge article. It was about vaccines and everything, but it was talking about the S&P in the last 16 trading days. 163-point rise in the US after it was closed, but during the day, only 4.3 points higher. And I think that's powerful because we kind of see that. I mean, in all of these pre-market moves, because it's low liquidity and it's an easy thing to do at that point. And this is why I marked a couple of key thresholds from yesterday's video report, and I said to you, hey, wait till the open session and you will have a little bit more opportunity for things to move the opposite direction, which, guess what happened? They moved to the opposite direction. We came through, we hit the various supports, traded around them, and then bounced from there. And so this is the modus operandi. I mean, you've got low volume in the after hours session, drive it back up. We're now back at, in pre-market here, above the highs from before. And what did it take to do it? Not a whole lot. That's the beauty of this subtle manipulation. And that's the only way you can refer to it, because it is a manipulation. We all know that this isn't necessarily based on what traditionally has been used as a fundamental construct. But it's also worth noting that during the pandemic, what was it? Richest 1% saw, what, $500 billion in wealth increase? So you always just follow the money. It's very simple that way. Anyway, we're going to look for, I think, a continuation of this push on. That doesn't mean that we're not going to have backfills into each of these positive extreme setups. We have a whole other set of new ones that are developing right here in the 3,000 range. Not worth marking an even number because it's sort of a pretty consistent psychological barrier on those. But from the rest of them, if we get any unique ones as we're up here in the 2014 and plus range, we'll go ahead and be ready to have a whole new range of them. So exciting times, and so much for sell in May and go away. Of course, May isn't over yet, is it? But if you're selling, now would be the time to do it, because you're right back up at the highs that were there before, and it's as though the virus never happened, just like that, at least from a market standpoint. Nonetheless, we'll keep up following what's going on and keep you at the top end of it. It's pretty straightforward, easy stuff. I mean, nice signal came through, retested right at the lows, but then shot right back up. DOC spread from up at the peak here, came down, filled beautifully. So just a matter of being ready for them and taking them when they're available. As always, trade well. I'll see you on the Escape Chat.